Big warnings about silver and gold from a coin shop veteran from every corner of the planet. We're going to talk about why this could impact you, impact your silver and your gold. Today, we're joined by the one and only, the king of junk silver, Coin Shop Chris. Welcome to Ron's Basement.
How you doing, Ron? It's been a while since we've had the hurricane and everything else down here.
Everything's going great, Chris. We appreciate you joining us today. We know you have special insights into what is going on right now in the silver and gold market, and obviously for all of us, right, including our very important viewer who's joining us. It's been a rough 8 or 9 days in this market, so we've got reason for optimism, but you also have some kind of scary news from people you've talked to all over the world. And we're going to talk about that in a few minutes, but let's go take a quick look at the price of silver and gold this morning, do an update as to what is happening, because as we know, we've gone through quite a period of, let's say, consolidation. Here we are, channel sponsor Pimbex's website. I'm going to do an update on the silver and gold price. Okay. Hey, Chris, Coin Shop Chris brings good luck. Silver's up 7 cents per ounce. Gold down only $4 per ounce. And compared to what we've been going through lately, that's pretty darn good. Thank you to Pimbex for sponsoring Ron's Basement. If you want to get your hands on silver, gold, or platinum group metals, and you want to get great prices, ultra competitive pricing, great selection, and a company that you can trust, you can call them on the phone, talk to Mike or Brian, the owners of the company. They're both CPAs. They always encourage everyone to stack responsibly. These are great guys with a mission to get as much metal into the hands of the stacking community as possible at the best prices, the best value. Chris, how have you been doing lately?
Well, we've been doing great, Ron. We survived the hurricane and we gained the shop back in order, and people are fixing up their homes down here. And I mean, it's been a challenge, but we're making it, Ron.
Sounds good, buddy. We're going to get to your warnings that you have for our viewer about what's happening and these people you've talked to from around the world, literally. And I think it's critical information for people to hear about silver and gold. I want to touch on two more things quickly before we do that. Let's talk about manipulation. Do you think the price of silver possibly is manipulated a little bit, Chris?
110%, Ron.
Well, look at this.
Yes.
Look at this from the dude on X, right? This is yesterday's data. If we go down here, you can see trade date Wednesday, the 13th of November. The silver market, the electronic paper unicorn fart dust silver market, traded only 467 million paper ounces. Okay. Unbelievable. Still trading more than 50% of the entire world's annual output, okay, of silver in one day. I mean, it's just absolutely crazy what is going on in the silver market, and it's going on all over the world. Now, you've been talking to some people throughout the world, Chris. What are you learning? Tell us these stories about the two people you've talked to recently that are issuing some caution to the gold and silver stacking community.
Well, let's start with India first, Ron. I mean, you know, he comes over for the holidays every single year. Him and his family. He has a brother that lives in the
we lost you, Chris. Chris, Coin Shop Chris.
Light up. An ounce of silver, folks. An ounce. Can you hear me?
I can hear you now, but
I'm here.
Okay, go ahead. So you talked about your friend Amir, and then we lost you from there. Okay. Can you hear me?
Okay. I talked to my yes.
All right, go ahead.
I can. So I talked to my friend Amin. He comes from India, and he has family here, and he comes for the holidays. And he says when people get an ounce of silver in India, what he does, he's a doctor, and he gives people 1 ounce of silver, and he can pay that for about 2 months of lunches. Sometimes it's a month and a half, depending on the silver rate and stuff like that. But their rupee is worth about 1 cent in American dollars. So they need a lot of their own money to, their average light bill on is $23 to $50 a month. That don't sound like a lot to us, but to them, that is a lot. Their average monthly pay in India is about $201 a month.
Wow.
In American money. So take that. So, take a couple of tubes of silver egos. That's their yearly income. And people are living together. Families are living together. Grandparents, kids, and grandkids are all living together, but they're all working to make ends meet. So an ounce of silver can go a long way. $100 bill in our money can buy 13 nights in a 5-star hotel in India.
Wow.
That's just amazing.
Let's pack our bags and go to India for how long? A week? A month? Are you there, Chris?
2 weeks. $100 can buy a fancy hotel room. I'm here.
Okay. Yeah, we got you.
I'm here.
Yeah, I can hear you, Chris. We can hear you. What is he saying about the general attitudes towards silver in India?
People love silver, Ron. Okay, people just love silver. They're stacking like little BBs. That is what they are stacking in jars and stuff like that. India's not big on tips, but since he does make house calls, he does get little BBs. And I had a question for him. I said, how can you verify the silver's real? He says, well, that's kind of hard to do. But he said, when you take it to the melter, he says it's normally coming back about 99.3% silver.
Okay.
Most of it. So he gets paid out on the value on that. He's allowed to bring, him and the family allowed to bring so much silver back every single trip when they come, and his brother sends him so much silver every single month. People's eyes are just lighting up with silver. And he said, these are his words, the American people better wake the hell up and get more silver before it comes the dollar going to be crashing. His words, not mine, not trying to scare people, but, they're part of the BRICS, Ron. They're part of the BRICS, and they are trying to get away from the US dollar as much as possible there as well.
Yeah, well, and it sounds like that's what we say a lot as well. Like, the American people better wake the heck up, because the dollar, I think Americans and our viewer who's joining us right now, I don't think any of us have we've gone through a slow motion currency collapse. I would argue that since 1971, when the value of the dollar has lost 99% of its value as compared to gold, that we've gone through what is a slow motion currency collapse. But it's going to get worse over the next 50 years. When we look at the U.S. debt clock, there's no denying that it's going to get worse. Do you mind if we take a quick field trip out and look at the U.S. debt clock, Chris?
Go right ahead.
Here we go, guys. Right?
Are we at 36?
Here. No, we're at 35,998 billion US dollars. Okay, we are any minute now going to eclipse the $36 trillion level in national debt. So to think that what this guy from India is saying regarding the rupee can't happen in the United States, well, it's already happened over the last 50 years, right? The dollar lost, I think Rick Rule said it the other day, during the 1970s, the dollar lost 75% of its value. Okay. And so to think that now in the coming, I'd say 5 or 10 years, I could see the dollar losing another 75 or 80% of its value, especially with these massive changes and massive, propositions that we have about what President Donald Trump is going to want to do. I mean, getting rid of the federal income tax, getting rid of taxes, whatever, like, hey, that money's got to come from somewhere, right? And I'm not making a political statement at all. Right? I think people know which way I lean politically, but this same situation is heading to a country near you. And if you're joining us today from the United States, well, then, we could see the same thing happening here.
And he said, once these dollars come home, we're going in hyperinflation, Ron. we're going to see prices we never seen before. And there's nobody's going to stop it. I mean, there's nobody's going to stop it. You know, he said, get ready for $15 a gallon of gas. Get ready for $12 gallon milk. And a lot of people don't think we think we're joking, but we have always seen prices go up. They have stabilized a little bit right now. And I believe that's through forward because of the upcoming holidays. I think after we get past the holidays, we're going to start seeing more inflation that we never seen before.
Right.
And,
right. Yeah, we're living in a fantasy land right now. You know, where things are still somewhat manageable. There's all this glow about a new president and things, you know, world peace is going to break out and the economy is going to be strong and blah, blah, blah. But, you know, let's see 2 or 3 or 4 or 6 months from now or 9 months from now where we are. And again, not a political statement, just looking at the actual facts on the ground, right? And I'll point this out. I heard a top economist say this just yesterday. If the economy was so strong, like they say it is right now, right? Bidenomics is working, right? If the economy was so strong, commodity prices wouldn't be crashing like they are. Commodities across the board, oil's down, wheat, all the farming commodities are down, silver and gold are down, copper's struggling. If the economy was actually so strong, right, we would have booming commodity prices just like we have this booming. I mean, what's booming right now? The stock market, it's already a bubble. It's a double bubble. I was talking with Mike from Pimbex this morning, and he talked about what I said yesterday, which is, you know, the stock market is a bubble, and now it's like a double bubble. And then if you know, by any measurement, look at where the stock market is compared to any other time in history, whether it's the tech bubble or right before the great financial crisis or even right before the Great Depression. And we are at like unbelievable value. None of it makes sense. And now it's even going higher. And then you've got Bitcoin, which I know you love, Chris, Bitcoin. And I'm not anti-Bitcoin. We're all on the same team. But Bitcoin's being blown up. We're living in this like fantasy land right now, is what it feels like.
Absolutely, you know, and, you know, I don't do too much politics either on, you know, this is not a political statement at all. People wanted a change. So people put Trump back in. And he made, you know, he's not able to vote in this country, but he made a prediction. And what he's saying is, he says he thinks by the end of next year of 2025, that we're going to see a financial collapse in this country that we've never seen before. It's going to be well worse than 2008. And they're all going to point the fingers at Trump because he's in office. And that the Democrats are going to try to point the things at him. See, this is what the Republicans do. And they're going to point, and it's not going to be his fault. I mean, you know, it's not going to be, and I want to make that crystal clear. It don't matter if who got in office. It's not the president. Presidents don't make law. Congress makes law. If people, he said, if people want to make a change in this country, we got to change Congress in the Senate. That's what he said.
Yeah.
And both will be.
There's unbelievable amounts of change going on. And there is speculation. We lost you there for a second, Chris, but I want to point this out, and I'm going to emphasize speculation. I've heard from several people that they're setting this, like with this market exploding now, everything exploding up, that they're setting Trump up for, like you talked about, a potential crisis in the next year, 2 years, whatever. We'll see how all that plays out. We know that 2024 has been relatively crisis free. It'll be interesting to see how things go down the future. Chris, you want to move on and talk about China here for a second?
Yeah, I mean, I know a woman in Maine. She's been in this country. She's able to vote, and but what's going on in China is people are stacking gold beans. They look like a bean. They're about a gram each, and it's a lot of younger people. She's getting reports from back home. A lot of younger people, like 18. They're starting at 18. They're stacking little gold gram beans, and they're getting their yuan out of the system. But China is telling their people to stack silver and gold. Now, China's not so much on the.
Oh, we lost him there for a second. While he gets back and reconnected, let's go out, and since we're on the subject of China, and just check. Chris, you're back. I hear you.
Yep, I hear you.
Okay, we lost you there for a second. Go ahead. You talked about the young people going out buying these 1 gram beans. Go ahead.
Yeah, they go buy these, and the shops does not have enough every day. She's like, think about a Brinks truck coming to the location every single day. They get so much per day. They're sold out in hours.
Wow.
Young people, and it's not just young people, it's every type of age, but she's a lot of younger people are buying gold.
Mm-hmm. Mm-hmm.
And
that's interesting. That's interesting because my friend, his name's Chen, and he's a PhD. He grew up in China. His family's still in China. He's telling me kind of the same thing, and he also says that he made this point, which is he confirmed what you read in the press about China, that people are crazy about gold and silver right now, absolutely crazy about it. And I'll never forget him telling me, he's like, that's because the stock market crash. That's because the real estate market, they're going through what we went through in 07, 08. Their residential real estate market has crashed. Okay. And what's even more interesting over there is people in China are smarter. They don't really trust the banks. They know paper money is just that. Paper money's like, so everybody's buying gold and silver right now, which sounds like what your friend from Maine, who's also still very well connected to China, is telling you as well. Oh, are you there, Chris?
Exactly. And she's starting, I'm here.
Okay, go ahead.
I'm here. Okay. All right. She's taking 90% silver for her business. And she said she don't get a lot. She will accept 90% silver. She's going to get a Sigma next year. And she's going to start taking ounces too for payment. She says it's very low amount of people. She says maybe like a less than 1% of her sales are paid in 90% silver right now.
Wow.
So, I mean, she says people need to wake up. She basically said it's like driving Miss Daisy, but Miss Daisy's in the back seat actually driving because the driver is asleep at the wheel. That's how she put it. And Miss Daisy's trying to, and she's trying to save from having the vehicle having an accident run. That's how she described it.
In terms of the kind of the general American attitude towards silver, huh? Very, very interesting. Yeah, when you talk to people, and I talk to a lot of Indian people, my kids are friends with an Indian guy, but some Indian neighbors. I got a neighbor across the street, Asfaha. He's from a little country in northern Africa called Eritrea, which is right next to Ethiopia. Greatest guy, one of my best friends, and I'll never forget this. Kind of when I first met him, he's very successful. His kids have been very successful, hardest working couple I've ever met in my life. But I was talking to him one day. His son was in law school, and he was talking about his son, and he's like, yeah, my son's in law school. His son now works for one of the big 4 accounting firms. And anyway, his son was in law school at the time, and he's like, he's in law school. His son at the same time had started like a tax preparation business down in Orlando, Florida. And his son was always really into cars, like Nissans and Hondas, fixing them up and all that. And he could work on cars. He's like, my son has 3 things that he can do. But what he said, the way he described it was, he said he has 3 things he can do to get the gold, right? To get I'll never forget him saying that, to get the gold. He didn't say to make money. He said to get the gold. And since then, subsequent, I've talked to him, and he's like, oh yeah, gold is like in Eritrea, which is a poorer country in Africa, but they do have some gold. He's like, gold is what people, that's how they measure their wealth, right? And that's prevalent all over the world. It's very, very, very interesting.
And she made one more point, Ron. She says, why is China? She's asking me this, and I didn't have no answer.
We lost you, Chris. All right, we'll wait for Chris to come back. And while we do that, speaking of China, let's go out and take a look at the latest data
for the
from the
grains.
Okay. We lost you, Chris, again.
Sorry.
That's okay. You said one more point from your friend in China.
Yes, they're stockpiling food, grains, rice, beans. Why? She's like, she's trying to figure out what is really going on. Why are people all of a sudden, for the last couple years, stockpiling gold in silver? And nobody can figure it out. I guess nobody can figure it out. Oh shit. So I mean, we're all trying to figure it out.
Yeah, they're stockpiling grains. Let's go out. I'm going to take us out, and then you want to give one more warning and some insights in regards to what you're seeing in the 90% silver arena. But I was taking everybody out. We didn't want to do a quick check on the. You want to say Shanghai for me, Chris?
Shanghai. That good enough?
Yeah, that's great. Shanghai Gold Exchange. This is yesterday's data. Silver, as you can see right here, AG. Priced in US dollars in China right now, $33 per ounce. Now, if we go to Pinbex, let's do a quick check on the silver price in the United States. Okay, we're up 15 cents, $30.50. So the silver price in China almost, I would say, about 8%, 9% higher in China for physical metal. And remember, the Shanghai, I say high because the price is always higher in China, is a physical market. Chris, what are you seeing? You're seeing some interesting developments in the 90% constitutional silver arena. And I want to remind our viewers, some people call it junk. Some people call it constitutional. Some people call it 90%. And here, I have some right here. I can show the audience. Right? Anything half silver dollars, there's a $50, dimes, quarters, any U.S. coinage pre-1960 or 1964 and earlier is made out of 90% silver. They aren't making any more of it. And are you seeing anything that you think is, let's say, interesting in that market right now, Chris? And Chris is not there.
What I've seen wrong last Saturday, the shop. I'm here.
Okay. All right. Go. Keep talking while we got you.
I'm here.
Okay. Keep talking. Chris.
Yes, I hear you.
Talk.
Okay. I can hear you. All right. 90% silver. Last Saturday, we had about almost $1,500 worth of dimes. They're gone in one day. That is unheard of for our shop. We just didn't. Everybody wanted dimes. I don't know where it all came from. I just don't. I mean, dimes were gone. We still can't find dimes. We had $50 worth of dimes come in this past week, and they were gone in the same day. What we are doing, Ron, we are offering coupons if they want to buy $10 worth of face of Franklin's, Walkings, or quarters, Ron, and they want to exchange it. We're offering 90 days to return them for the same price to get their dimes. Or we're telling people to go to like your sponsor, Pinbex, because they have a great price on dimes, to go to Pinbex. We have no other choice. We can't find them. We've called other coin shops across the country. They're getting low, or they don't want to give them up. That is what's going on. So I don't know what you found out or Pinbex, because I know you talked to Pinbex about dimes too, just today too, Ron.
Yeah, I talked to Mike, one of the owners at Pinbex, and I asked him, and he checked on what what their inventory looked like, and he said they have plenty in stock, right? But he did make a comment that the amount of 90% dimes in particular that they have in stock was probably trending towards definitely the lower side. So meaning that, compared to, let's say, over the last year or two, the amount of silver dimes that they have, 90% constitutional dimes in stock, is definitely, leaning towards the lower side. We can't say like sold out or a shortage or anything like that, but that there are some kind of developing signs of stress within that market. All right, Chris, thanks for joining us today. Okay, we're going to look forward to seeing you next time. I want to remind everybody that Coin Shop Chris, the one and only, has his own YouTube channel now. I'm going to take you out there real quick. If you go onto YouTube and type Coin Shop Chris in the search bar, you'll come to this. As you can see the coins, and it says Coin Shop Chris. He's got some great videos. His channel's growing like crazy. One of the fastest growing channels in the silver and gold sector. Here's a great video, a big warning from India, almost 12,000 views. And he's got a lot of other interesting content regarding the silver and gold sector. And he's a great friend of Ron's Basement. Chris, we'll look forward to seeing you next time. Okay.
We'll see you next time. Sorry for the connection issues. Thank you guys for watching. Please give Ron a thumbs up, please.
Oh yeah. Thumbs up. Thank you, Chris. We'll see you soon, buddy. Bye-bye.
See you, buddy. Yeah, bye-bye.
All right, guys, let's move on to some interesting developments in this market. We've talked about the pain that we've all experienced since Wednesday of last week. It's been about 8 days now in the market. What's causing, we want to understand, right, what's causing this downdraft? And we are back in the situation where they are blaming it on the US dollar. And let's go out to Market Watch and take a look at what's going on with the US dollar index. Okay, well, it's down a little bit today, but guys, the DXY index is at 106.50. Okay, it has been on an absolute tear. Let's just look at a 1 month chart. Okay, let's look at it a little bit longer. Look at a 3 month chart of the US dollar index. So remember, this was on September 27th, the US dollar index touched 100. It has gone up 6.5% in, what is that, about the last 6 weeks. Okay. Now we're back in this situation because we're back in this environment where people are forgetting about this critical economic situation that we're going to be facing in 2025, stagflation. But over the last 6 weeks, we've seen the dollar shoot up precipitously. That's a big deal. But what I want to remind you of, there's a lot of different ways that people describe the DXY index. Some people say it's like, the dollar's the prettiest horse in the glue factory, the best performing patient in the hospice ward, however you want to say it. I was thinking the other day, it's kind of like the DXY index. It's basically the dollar, the euro, and the Japanese yen. Okay, think about that. Right, so it's these three crappy currencies weighted, and we're comparing it to gold and silver, right? And those currencies can print, they're make-believe, they're electronic, they're whatever, however you want to say it. But what I thought of was it's like those three currencies and the DX are the euro, the yen, and the US dollar. It's kind of like three people have been locked up in jail, and they're all cellmates in a jail cell. They're all been convicted of really bad crimes. They're convicted felons, whatever. And they're all sitting around this jail cell together. And one of them saying, hey, no, you're a good guy. And the other one says, no, you're a good guy. And the other one says, no, you're a good guy. Right. When the reality is they're kind of living in their own little microcosm, make-believe world. Whereas silver and gold, right, they are the reality. Don't forget, right? I want to say, it's been about a month since we've talked about this, and it's critical for us as metals investors to remember this, right? On one side over here, you've got precious metals. Over here, you've got paper money, dollar, yen, euro. Okay, you can't. This amount over here, silver and gold, maybe goes up 1 or 2% per year, right? Well, with silver, we know it's even more limited. Silver is shrinking, but nonetheless, over here, right? The yen, the euro, and the dollar, they can print as much of this as they want. They could double. They could do what they did after the C-19 crisis, print 40% more US dollars. It can go up into infinity. It will go up into infinity. Whereas over here, the metals, that's finite, right? Sure, it'll grow a little bit, 1, 2, 3% maybe per year, but the money, the paper money, will grow into infinity. And there's nothing better to demonstrate that to us. We're going to do a double feature of the US debt clock today, because we're almost there, guys. If we stay on long enough, we'll get to watch that roll over to 30. I bet tomorrow we're going to get our 36 trillion, but that's not what we want to talk about. What we want to talk about is over here. Okay, right here. I made the arrow bigger for you. The dollar to silver ratio right now is at $993. That demonstrates what we just talked about. This ratio measures the increase in the M2 money supply, which is like bank accounts, CDs, the increase of dollars, paper dollars, printed dollars per each 1 ounce of silver that's produced every year. And right now they're producing 993 paper dollars for each 1 ounce of silver that's produced. And we've been tracking this. I think this just is so critical and just blatantly shows, right? Here, what is today? The 14th? You guys help me out. 2024. What did we say? 993. I mean, look at these. That not only is that, even if this number was not growing, it would be astounding. Even back here, right? 3 weeks ago, when it was at $729, it was astounding. So it's an astounding number to begin with, but on top of that, it is accelerating. Okay, we've gone from 700 almost to 1,000. We're going to hit some big milestones here on the U.S. debt clock in the coming. I mean, what does that mean? $36 trillion. What does that mean? Right, $1,000 printed for each 1 ounce of silver. Right, that means this. This is a big takeaway that we need to realize. Gold and silver, right? My fist over here, finite. Can't really be changed very much, right? It takes a lot to get an ounce of gold or silver out of the ground. Over here, we see my fingers, right? That's electronic money. That's dollars, euros, yens. They could double that over the next 5 years. Okay, they could double the amount of dollars. They could triple the amount of dollars, euros, and yen. And those three are they're going to compare to each other like, no, you're the best. No, man, you're the best. No, you're the best, right? The three guys sitting around the jail cell who are locked up for life, right? The convicts, the con men. Are these the con men? Does it make sense? I hope that makes sense, because I think that's a critical key thing for anyone who chooses to protect themselves with precious metals. Undeniable. Okay. I want to warn you, another warning. Jerome Powell talks later today. Yeah, this Jerome Powell. We haven't had him out. You haven't seen him for a couple weeks, right? The king of toilet paper is going to be talking today. when I don't know, but they're talking about President Trump maybe getting rid of him. You're going to hear from him today. He's going to be talking, right? He'll be talking while this, right, is going on. Be prepared, because if he comes out with some hawkish talk, right? If he comes out with some type of message that is perceived as being hawkish, we could get hit again in the precious metals markets. I don't think that's going to happen, but man, nothing is off the table right now. Okay, nothing is off the table. The other big reason why silver and gold have been getting clobbered, and this makes no sense, and we're going to look at it just very briefly. Not only is it the DXY index that's out of control, but bond yields are out of control. Let's go quickly. Hold on here. Hold on. There it is. 10-year bond. This is crazy, guys. This makes no sense at all. And is something that's very important, right? Because it rattles me to look at this. There's a 1-year chart of the 10-year bond yield. All right, let's go down here. See my arrow? Again, that's right around that same time when the dollar bottomed. That's right around when Jerome Powell, let's do 6 months, cut interest rates right here. Here, let's draw. Let's get the crayons out. Okay, here, right there. Right, the 10-year bond yield was probably 3.6%, I think it is. I mean, it has gone up more than 0.75% since, right? Here we are today, at 4.42 since Jerome Powell cut rates. Does that make sense? Now, the other thing to consider with this is that massive amount of debt that we have on the U.S. debt clock, right? Right, this right here, right, creates this interest on debt, interest expense. This when the interest rates go up, and because the U.S. Treasury is now doing mostly a lot of short-term funding, as they have to refinance this all the time. It'd be like if you as a household had $1 million in debt, and every couple of years you have to refinance that debt. That is driving this interest expense way, 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 way higher. Look, the net result of all of this will be money printing and monetization. Money printing, which you know what that means for the silver price and gold price, in monetization of the debt. If we think for a second, right, that anything's going to change in the coming 2-4 years, I think we could be fooling ourselves, because there's this thing called mathematics, right, where 2 + 2 = 4, right? God, the universe set it up that way, right? Not even God can change the laws of mathematics. Well, maybe he or she could. I don't want to tempt God, right? But mathematics shows no forgiveness on the altar of truth. That's an absolute case. What about the banking crisis? Remember the banking crisis? Well, listen to this, right? Listen to this. There's this new term they're using, and it actually came out of the New York Fed, right? And when there's a banking crisis, again, right, that means rescue packages, money printing. The commercial real estate it's called extend and pretend. Billions, possibly trillions of unrealized losses sitting on bank books, but they're putting off the day of reckoning. This is fascinating, okay? And again, this will result in rescue packages, money printing, however you want to call it. Remember the BTFD, Bank Term Funding Program they used when we had the last banking crisis 18 months ago? That was like the more banks failed from a dollar perspective than happened during the great financial crisis. This is coming to a town near you, okay? Because last month, the New York Fed, okay, they put out a paper called Extend and Pretend in the U.S. commercial real estate market, okay? The research explained how Wall Street is using extend and pretend to make its commercial real estate portfolios look better than they really are. So what they're basically doing is, right, the banks loan, this is real simple, the banks loan $100 million to some guy to buy a big commercial real estate office building somewhere, okay? That building that was worth $100 million 8 years ago is now only worth $12 million. And that's happening right here in my hometown in St. Louis, right? The AT&T building in downtown St. Louis, it sold for like 8% or 6% of what it sold for like 16 years ago. There's examples from all over the country. So these banks loaned $100 million 8 years ago on a building that was worth $100 million. Now that building, let's be optimistic, because that's an extreme example that I just gave you, is only worth half as much, let's say $50 million. So now what the banks are doing is they're just extending the loans. They're telling that developer, well, don't worry about it. We'll extend the loan way out into the future, and we'll make your payments a little lower. They're not recognizing that right now, they're not marking it to market, that right now this is a big, big issue, right? And the banks are in big, big trouble. The New York Fed put the paper out. Now, on top of that, you've got the bond portfolios that the banks have, right? You gave the bank $1 million, Richie Rich, right? The bank took your $1 million 5 years ago, 3 years ago, and bought a bunch of 30-year, 20-year U.S. treasuries at 2 or 3%. Those treasuries are now worth half as much, 60% as much, right? They don't have to, as long as they're going to hold those to maturity, right? They're fine. Unless you show up at the bank and want your money back, and they've got to liquidate those bonds, and like, well, sorry, our bonds are only worth half as much, which of course then the FDIC would come in, which of course then would mean that we would have more darn money printing. Everything leads to the world, the magical world of this. And thank you to our friend Don Endress for sending this to this, right? Printing more of this stuff. Everything leads that way, but it's even crazier. Consider this. When you look at the fact that what we looked at, that 10-year bond yield up almost 1%, 0.75%, whatever it is, when the yields go up, the value of the bonds go down. So the banks are now, compared to 6 weeks ago, again in hot water with these things. I mean, look, you're not going to walk into your bank. I love my bank. It's right. I can walk there. It's like 300 yards from my house. I love them. Carmel, the bank manager, she's nice, right? Right. I don't keep a lot of money in the bank, but she still likes me. Anyway, when I walk in that door, all I ever see is these big placards that say, sign up for our platinum checking, sign up for our gold money market account, right? They aren't going to put signs up that say, warning, right? The commercial real estate that we invested in is now only worth half as much. Warning, the bonds that we bought with the money that you gave us 4 years ago is now worth only 70% as much. And I'm not saying that's specific to my banks. I have no idea what their financial condition is. What I'm just telling you is that's the situation right now. They're probably thinking they can inflate it away, right? Everything will be okay 5 years from now, right? Because the dollar will be worth half as much. That's probably the plan in the banking sector. But the higher interest rates are putting more and more stress on the banks. And as the world is saying, we don't want U.S. Treasuries. We don't want it. Sorry, Buttercup. You Americans, we don't want to buy your debt anymore. We don't want to finance you. China doesn't want to China saved us during the great financial crisis. They bought all of our debt, right? No, they don't want it anymore. That's going to make rates go even higher. I'm telling you guys, we could be in for some very, very interesting times here as we move into this coming 2 to 4 years. Oof, we got a lot more to talk about. I forgot. I want to say thank you for being here today. It's the most important part of the show, right? Please, I want you to know you're important. I want to give you quality content on a daily basis about silver and gold. But most importantly, right, I want you to feel like you're part of this group because you are part of the group. You've got a name. Think of your name. Your name is just as important as me and everybody else that's here, but we're all coming together. We're part of a tribe. So all I'll ask is that you please subscribe. And give it a thumbs up if you wouldn't mind. Oh, we've got a super chat. Hold on here. Our friend Silver Surfer, thank you. You're generous on a regular basis. Says money was codified in 450 BC, and credit was first codified 800 years earlier. We live in a bizarro world, so the dollar will crash when credit implodes. Yeah, we live in. Thank you, Silver Surfer. Guys, we are living in a fantasy world right now when it comes to economics and money. No doubt about it, right? Math does not apply right now, but math does apply at the end of the day. There's no way. Trump is not going to hey, Stacking Susie says stacking. We have Silver Surfer and Stacking Surfer's on as well. Hello, Stacking Surfer. Good to see you. Go check out his channel, guys. Another friend of Ron's Basement, our friend out in California, the Stacking Surfer. Very interesting content. He's got some really great, unique insights into the silver and gold market. But Donald Trump is not going to turn off the money spigot. Okay. He's just not. That's my opinion, right? Not a political statement. Trump has a history of, I'm going to beat this, it's a history, both as a previous U.S. president and as a businessman, of racking up debt. That's a fact. Okay. I'll say it one final time, not a political statement. Did we hear one serious word from Donald Trump during the election process, during the debates? One serious word about addressing the U.S. national debt? No, right? Okay. We did hear a lot of extraordinary promises, right? Eliminating the income tax. I mean, it's unbelievable what they're talking about, changes that they're talking about. But all those big changes, all those big tax cuts, all that, right? That requires money. That requires money. And the only place that money is going to come from, 6 or 1/2 dozen the other, is through money printing. That's a fact. That's exactly what's going on. And right now we are in a deflationary debt spiral. There's no other way to look at it. I mean, we are there, right? He is not going to embrace austerity. We can't expect that to be the case. Okay. And that's fine because we're into silver and gold, right? I mean, Trump's into gold. He likes gold toilets. I researched that last night. I remembered that. But yeah, I mean, Trump likes gold and silver. Trump likes to borrow money, to print money. I think that here's what I feel. I could be wrong, but I feel like a year from now or 2 years from now, we're going to look back at this painful period that we're going through right now as precious metals investors, this painful period post-election of Donald Trump. All political feelings aside, right? Just the fact that silver and gold, I mean, gold's down, 6-7%, silver's down 12% since the election, that 2 years from now, a year from now, maybe even 6 months, maybe sooner from now, we're going to look back and be like, woof, isn't that weird? You know what I'm talking about? Like, you look back and think, wow, we were so scared as precious metals investors. We were questioning ourselves. Maybe you do that. Look, we all do it, but everything turned out to be A-OK. That's what I think is going to happen. That's what I think we have to look forward to. Hey, thank you for being here today. Thanks to channel sponsor Pimbex, First Mining Gold, Canadian gold developer with 2 multi-million-ounce projects in Canada, and Fortuna Mining, right, an operating mining company, silver and gold in Latin America. And I got one more good thing for you guys, okay? One more good thing. But Fortuna's mining silver and gold in Latin America and a lot of gold in West Africa. Very exciting developments. They had great earnings. Third quarter earnings came out last week. Guys, don't forget, I want to pull this up. I'm doing a DirtyMan SAFE giveaway on December 30th. If you want to enter the giveaway, there's a link in the description of this video. If you want to learn more about DirtyMan SAFE, you can go to their website. And I do have a 10% off code you can use, Ron10. Okay. You can do what the pirates did. I made that up. Do what the pirates did. Bury your silver. What did the pirates do with all the silver they got? They buried it. Right? People are still looking for it today. Well, you can do the same thing, right? People target safes and houses, fires, floods, whatever. If it's buried in the ground, that's where it came from. I'd say it's pretty darn safe. So DirtyMan's, I was really, really impressed with the DirtyMan SAFE that they sent to me. And I'm so impressed that I'm going to give one away to you on December 30th. All right, guys, thanks for being here. Thanks for being you. Okay. And I'll see you soon. Have a good day.